am Sai Sneha, and I am here to do my selfie seminar on the topic trend analysis. And I have chosen the title of my presentation to be Trends, Change or Constant. The analysis of whether things remain the same or change and the reasons behind the change or their constant existence. So that is why I chose my topic to be trends. Are they changing or are they constant? That is what trend analysis is all about. So let us begin with what is trend analysis. Trend analysis is a technique that is used to examine and predict movements of an item based on current and historical data. You can use trend analysis to improve your business using trend data to inform your decision making. So to put forward in a very simple terms, trend analysis is basically used so that you can predict how your item changes over a particular period of time. It can help us to indicate how the current data as well as the historical data is being used. And this information can indeed be extremely useful for us to make good and informed decisions. Moving on, next step we have, as businesses become more established, we will have to compare data in a lot of streams. And trend analysis is currently being used in a multitude of zones and fields where people are using this data in order to form a lot of decisions. The first one is for financial performance. The financial performance of various companies are being analyzed by using various trend analysis techniques. For example, the equity debt ratio as well as the profit or how is the revenue growth, all of this are currently being done using trend analysis. Next is competitor movement and growth. You can also help us to identify how the various competitors in the industry are performing, how their movement and their growth is. The third one is manufacturing efficiency. The efficiency of various products that your company is manufacturing can also be identified by how it has been changing over the years and has improved or stopped. The fourth one is new or emerging technologies. What are the technologies that are emerging in various fields and how these have changed over the years? Is there a growth or is there a decline because of the emerging technologies? All of this can also be analyzed using trend analysis techniques. The fifth one is customer complaints. You can also figure out how are your customer complaints for your product and services that your company provides have changed throughout the years. Have the complaints been increasing or are they decreasing, or there are constant complaints that you are rendering support and service to? The sixth one is staff performance reviews and key performance indicators, KPIs. The key performances can be efficiency or how well you providing the low cost or how the economic value that you provide. Any of this can be the key performance indicators for your service and for your particular sector. The staff performance reviews are basically you evaluating your employees about how they're working or how their working in the company has been for over the years. Next up, we have trend analysis consists of three different things. The first one is trend data, which is for assessing changes within our own business performance over time. The next one is benchmark data for comparing your business with similar organizations that exist in the same industry. The third one is market trends for analyzing the data from a whole industry or sector. So make it very, very simple. Trend data is when you look at your own ways and how you have been improving, declining, or comparing your performance. Benchmark data is when you take another company, so let's say X and Y, and these two companies are being compared against each other to know how the trends have been varying in both the companies. The third one is market trends, in which the whole sector is taken as a whole, and then you're analyzing the data on various factors for the whole entire industry. There are three different types to trends to analysis. The first one is upward trend. In upward trend, as the name indicates, it is a sustained period of rising prices in a particular sector or market. So the prices have been rising and you've been having an upward trend. Next is downward trend, which is quite the opposite of the previous one. It is a sustained period of falling prices in a particular security or market. The third one is a sideways trend, and this one is basically a period of relatively stable prices in a particular sector or industry where there is not a very great decline or a very great incline that is upwards. It is rather having a very mediocre and sustained relatively stable fluctuating prices. Next one, let me tell you with an example how this whole thing of trend analysis even works. Let me tell you a small story. So, in this story, imagine you all are investors and you are trying to figure out if you can invest your stocks in a particular company or not. Then you are trying to do data collection, which is the next step, where you're trying to get records and analyze all the things that are present for that particular company and see if it is actually good. Next up, you prepare different charts to help you analyze your data to show the trends over time in various different sectors. After preparing charts with the data that you have collected, you next create a linear regression model, or you can use other models that are present, and you try to find the relation between various factors and how they have been varying over time. Now, analyzing all the things that you've collected so far, you decide, for example, that if you understand that you're investing in this is actually a good thing, it is time for you to actually invest. If it is not, then you do not invest. So let's be optimistic and say that you see that investing in this particular stock market can actually help you gain a lot of profit. So it is time for you to now invest in this particular sector. And that is how next cycle you again turn up to be the investor, and then you start analyzing things and decide whether you can invest or not. So to put forward all of this in a series of steps, these are the steps that are followed in preparing a trend analysis. The first one is identify the security or market you want to analyze. You want to understand the agriculture or fishery or sales or production. Try to figure out which one you want to analyze. Gather the data related to that particular sector or what all information you need in order to analyze that market. Organize the data. Data can often be very large, and it's very essential for us to organize them in order to understand them quicker, better, in a proper way. Analyze the data that you have organized. Try to figure out how the trends have been changing over time, what are the factors that have been affecting, and how this data has come into existence. The next one is interpret the results. Based on your analysis and whatever you have put forward until now, interpret what all you can understand from this particular data and see if it is right or what conclusions can you make. Use the results to inform your trading decisions. Now, you need to think based on your interpretation that is it right for me to trade or invest in this particular company or not? Or is the step that I am going to take going to be an advantage or not? The next one up, here are a few examples of various statistical methods that are generally used in trend analysis. Moving averages is basically used to smoothen the fluctuations over data. It is usually calculated by taking an average of data points over a period of time. The second one is linear regression. It is used to find the relationship between two variables, and after plotting those lines, you try to find the fitting line to see how the slope is or to determine the strength of how strong the trend is. The third one is correlation. Correlation is basically a statistical measure that indicates the strength and direction of relationship between two variables. If it's positive correlations, it means that they're in the same direction. Negative means it's in opposite direction. And no correlation is usually shown when you can neither find a positive or negative correlation trend. It will help you to understand the relationship between two variables over time in a very great extent. The next one up we have the different pros and cons of trend analysis. The pros can be it helps you to identify opportunities in the buying or selling securities. It can also show you the potential risks and warning that you may be headed for if you invest in this particular sector. The next one is that it provides insight into the market psychology and momentum about how the market works, how it's been going, and should you invest in this or not. The cons, on the other hand, can be if markets are efficient, trend analysis is not necessarily as useful because the markets are performing extremely good. And if data is incomplete or inaccurate, you may end up having interpretations or conclusions that are not true. And the third one is that you take if you may not take the account changes in companies' management, change in industries, and other external factors that could affect the company's security performance. When you're too much analyzing the data, you might tend to overlook all of this. And different statistical measures can sometimes give you different results. So it's usually recommended that you take an overall view and then analyze. So these are a few benefits of trend analysis. It is easy to compare the performance of two or more different firms in the same industry or different ones. And it can be also used as a myriad of numerical data types, including traditional data types and alternate data types. Also, data suggests that you can use long term trends to identify actionable patterns. You can use trend analysis to examine preliminary financial statements and see their consistencies and inconsistencies. The last one would be trend analysis allows you to examine the entire stock market to detect the signs of potential trend changes for the better or worse. So, you will know where to analyze, where to invest, and where to not. And you'll actually get to know what's happening, and trend analysis can be extremely useful. So I would like to say that trend analysis has been going on for a really long time, and it's a very good thing for all of us to perform trend